Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence. We're going to take a look at the Reconstitution in the Nasdaq Biotech Index, of course, for National Biotechnology Month. Mark, it's great to have you with us. Welcome back to Trade Talks.
Thanks, Jill. Great to be back.
All right, and let's talk about the NBA Reconstitution in December. Tell us about some of the moves you saw there.
Yeah, so we saw a really busy reconstitution for Nasdaq Biotech Index. Just as a reminder for folks, this is an index that's been around for almost 30 years, launched in 1993. We saw a bump up in index membership from about 270 to 370 with 129 additions. You could see there on the chart showing this kind of history of annual reconstitutions going back the last 10 years. 129 new ads, that's a new record, besting the record that we saw in 2020 with 100, and then there were 38 deletions as well. That's pretty average, what we see year in and year out. So on a net basis, right, the index gained 91 names overnight in December. On a net basis, that's also setting a new record. You can see on the right-hand side just how much of this activity in the last 2 years from these reconstitutions has been stemming by recent IPOs. It's been a really, really hot IPO market in the US across many sectors. Biotech has been one of the hottest, especially sort of since COVID-19 hit. The big success of companies like Moderna and BioNTech, which were these kind of early stage, still startup type biotech companies. Now, of course, many tens of billions of dollars in market cap. And we'll talk about on the next slide sort of how some of this IPO action is having an impact on performance.
Right, but when you talk about the biotech IPOs, does that reflect any recent trends that you've seen in the space?
Yeah, I mean, the trends are that companies are coming to market even earlier in their development stage than we've been seeing. There's just been really an explosion of fundraising, both on the venture capital and the private equity side over the last couple of years, sort of independent of biotech. And so the spigots are wide open, right? Any company with a decent idea, with a path to commercialization, is going to get funding. And we've seen those rates in the private market really set new records for the last couple of years for biotech in particular. And that's, no surprise, leading to a lot of companies growing large enough, their valuations getting large enough to justify also moving from private to public.
And Mark, to wrap up here, what does this mean for the index's performance at the end of the day?
Yeah, so the index last year, you would have thought maybe that given the market did pretty well, S&P 500, Nasdaq 100 up in the upper 20s for full year returns. And with COVID-19 going on, you would have thought maybe that this index would do pretty well. You look historically, I mean, the correlation of biotech to the broader market is actually quite low. There have been several instances where biotech has corrected or been in a bear market when the broader market has either kind of flatlined or gone up. And so what I'm trying to show on this last slide here is really an explanation for the underperformance last year. When you segment the index, and this is looking through right up until the date of the reconstitution, on the left-hand side, if you segment the index into the top 20 constituents, right, the most important, biggest companies, it's a cap-weighted index, so that's about 60% of the index weight. Their return contribution to NBI was pretty strongly positive. It was almost 13% for the full year, and the average return of those top 20 largest companies was 32%. You look at the rest of the index right next to that, 40% of the index weight, and approximately 250 companies before that reconstitution contributed almost a perfectly equal and negative offset of a loss of 11%. With an average loss per constituent of 17.5%. So a tale of two cities in biotech last year. You had a lot of strength, not uniform strength in the large caps in biotech, but enough strength to drive the larger cap segment higher. But almost all of that was offset with really just strong underperformance in small caps, a lot of those recent IPOs too. Luckily, on the right-hand side of the chart, you can see this index is pretty well balanced across large, mid, and small caps. So small caps are not going to be driving performance here uniformly, although they do have the opportunity to offset what's happening in large caps.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.